Good morning, everybody. You're welcome to today's morning market review. First of all, I would love to apologize for starting a bit behind schedule. We actually had to settle some technical issues. You know, sometimes man is willing, but tech isn't willing. So apologies for starting quite a bit late behind schedule. So we would actually start up right. So we'll start away right now. So this week, let's start up with a rundown of what has happened this week. I believe that for those who actually has been trading this week, or those who traded this week, you agree with me that this week has been filled with a lot of goodies. Yes, I say goodies because for those who know how to make the market, I'm sure they would have made something substantial from the plethora of fundamentals which happened this week. Let's quickly look at Forex Factory this week, and let's look at what I'm talking about. Because if you do not know where you're coming from, you may not be able to actually navigate where you are going. Yes, you may not be able to navigate where you are going. This week's majority of let me say this week started with the CPI, the consumer price index on Tuesday. And when we look at the CPI, you realize that the result of the CPI showed that inflation is not on an increasing note, as you know, it has been before. It's actually, you realize that your core CPI actually came out, exact as the forecast, and in the same manner, exact as the forecast. And you realize that everything talks about, there is inflation, but it is not as high. It's just a mild one. Do you understand? And that was one of the major reasons why you realize that the FOMC on Wednesday gave a very, 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 very dovish stance as regards, monetary policies. If you look across different instruments, you realize that as at yesterday, the dollar was very, 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 very weak. In fact, this morning, the dollar still opened with a gap down. Someone is saying no audio. Please, can you hear me, please? If you can hear me, please drop it on the chat. Someone is saying no audio. Okay, thank you very much, Mr. Adedayo Steven. Thank you very much. Okay, thank you very much, Mr. Veros. Okay, thank you very much. Now, you see that if you go across different charts, you realize that as at yesterday, in fact, for those that might be asking that what happened to dollar yesterday, dollar was actually down. In fact, it was so down that yesterday, when core retail sales came out all positive for the dollar, it still did not actually make any significant changes in the dollar. So in case you are asking, what happened? I wanted to trade core retail sales. It's actually, it shows that, the actual was greater than forecast, but the dollar wasn't strengthened yesterday. It was as a result of the FOMC statement. And what did the FOMC conclude? As at day before yesterday, which was Wednesday night, 8 p.m. to be precise, actually FOMC met and they all agreed that there is no more, they are pausing on interest rate hikes. And for those who have been following the morning market review, I believe that we've been able to actually probably inform a lot of us about how will I put it, the correlation between interest rate hikes and the strengthening of the dollar. When interest rates are increased, now don't forget, interest rate is one of the measures through which they tackle inflation. One of the measures through which the Fed Reserve tackle inflation. So whenever there is inflation and the sense that there is inflation, what do? They try to increase interest rates slowly, gradually. But then, because too much of everything is not good, at some point, you do not want to stretch it too long. You don't want to stretch it too far. You don't want to actually, over increase interest because of the adverse effect on the economy. So you realize that every month, Federal Open Market Committee will meet and they would actually decide, okay, fine, what is the monetary policy that we are actually going to be enacting to actually tackle monetary issues, inflation issues, and the likes. Now, throughout last year, money interest rate was increased sporadically. And that is why you realize that one of the best moments that the dollar ever enjoyed was last year. And that was because there was constant increase in interest rate. And when there's constant increase in interest rate, it tries to tackle inflation. And by such, it makes dollar scarce and of good value. When you have excess of something, remember, inflation is excess supply of the dollar, right? Good. And when you have excess of something, the value drops. And that is why you realize that when there is inflation, prices of goods rise. And that's because you can use large amount of money to buy few products. Now, your money is not valuable. And one of the essence of one of the ways they tackle inflation is by what? By increasing interest rate, taking out excess cash. Because definitely, when interest rate is being increased, number one, borrowing becomes less attractive. When borrowing becomes less, borrowing becomes less attractive, people are pushed, or probably they are enticed to actually want to save their money in the bank because of high interest. And also, you realize that by so doing, the currency start getting value. And now, after increasing over and over last year, this year they began to increase not as much as last year, slowly. But by the end of this year, by FOMC meeting that happened December 13th, which was day before yesterday, Federal Reserve said they are done. Their outlook was to say that the outlook of their speech was they are done increasing interest rates. In fact, they actually suggested that by early next year, there will even be cuts. And if we say that increase of interest rates strengthens the dollar, when interest rates is being increased, it gives out the sentiment that that the dollar is being strengthened. And if interest rate increase gives out the sentiment that the dollar is being strengthened and strengthens the dollar, remember what happens when they refuse to increase and they say we are done increasing, and they then give future projections of cutting interest rates. What happens to the dollar? The dollar falls. And that is why you realize that if you check out hold on, please. If you check out let's go to our chart, please. Yeah, this is dollar index as at yesterday. You can see what happened to dollar the moment Okay, so you can see the moment FOMC did come out. I believe you can see this. The moment FOMC did come out, as at Wednesday, you can see that dollar started falling. All through yesterday, dollar fell. Even till this morning, the dollar has been weak, and you can see this gap. Do you understand? You can see you can see this gap. So it means that the stance of the open of FOMC was that which actually which actually affected dollar negatively. So for those who actually are asking what happened to the dollar, why is the dollar weak? Retail sales and core retail sales came out positive yesterday. Then why is the dollar not strengthened? Even afterwards, retail sales and core retail sales did come out positive. It is because of of the dovish stance of the Federal Open Market Committee, FOMC. And that's why you realize that the dollar is weakened. So I decided to give us this background because if we want to know where we are coming from, where we want to know, how will I put it? If you want to know where we are coming from, if you want to know where we are going, we should be able to know where we are coming from. And that's why I have to give this background as regards the fall of the dollar. Now, please, before we start this money market review, before I will start looking at instrument, I want to emphasize that please, this you are saying is not a gap. Please, it is not a gap. It is not a market influence gap. So please, because I know that some people might be thinking it's a gap, and as such, technically, whenever we see a gap down, we want to see what a cover up. Please note, because I'm seeing some people actually asking me that, okay, what is the implication of the gap down on dollar index? It is not a gap down, it is rollover. If you check our announcement on rally.trade, you realize that what this gap is rollover. We had a rollover on not just what, on not just USD IDX, even on D30, on I think on USD IDX, on AE220, on Euro 50, on France 40, on ITA 40. Do you understand? Please note, first of all, this is not a what? This is not a gap down. It is just what? It is rollover, which is actually caused by what? A change in contracts between us and what? Between us and what? Our service providers. And that is why you realize that when we were giving a negative swap, if you're giving a negative, if you actually were on a sell, this gap will give you what? This gap will give you an undue advantage. But then, since it is not market what? It is not market oriented, or it's not market cost. You realize that what? One of the things that will be done for you is what? The negative swap will be added to you to take away that what? That undue advantage. And if you are on a buy, you realize it is not favorable for you. It is not favorable for you. And that is why you realize that for those on a buy, a positive swap was given to them in form of what? In form of rollover. Do we understand? In form of what? Or rollover. So let's quickly look at Euro USD this morning. Let's look at Euro USD this morning. Now, the weakness of the dollar actually did affect Euro USD. Starting from how will I put it? From Wednesday evening, you can see that Euro USD actually has been going on a bullish run as against what it has been doing for days. You can see that for days, late last month and early this month, you can see that Euro USD actually had been what? Euro USD actually had been on a downtrend. If you're going to be looking at your daily time frame, which I'm looking at right now, do you understand? But as we stand, you realize that the weakness of the dollar has actually been pushing what? Has actually been pushing Euro USD. Now, it might be expected. That might be expected technically that having gotten to what? A verified resistance on 1 hour and close to a resistance on a daily, if you check out your other time frames, you realize that it is close to what? A resistance. Now, it might be expected that price actually will pull back this morning if you're going to be checking your 1 hour. And that is why I'll be waiting for what? A breakout. Now, throughout late yesterday, you realize that price has been what? Has been ranging between that verified resistance and weak support. Now, for Euro USD, should I want to buy? I might be looking at buying above this verified resistance. I'm looking at buying along these zones. You understand? I'll be looking at buying along this zone. So I'll be looking at buying above this zone, looking at the fact that technically price is at what? Price at the resistance. Do we understand? And because of the fact, remember I said something, one of the things that you, technical 101, when you were studying technical analysis, they will tell you that when price is ranging, what do? You wait out for a what? You wait out for a breakout. Do you understand? You wait out for what? You wait out for a breakout. And that is why if price is ranging between this verified resistance and weak support, I actually might also want to place a sell probably at this what? At this zone, below that weak support. Below that, just to be safe, below this weak support. Now, there are people who actually will say that, okay, well, they must trade this morning. Now, I would say probably you're going to be using your what? Your buy limit and what? And sell limit, taking advantage of this verified resistance and weak support. However, that is for those who are scalping. Do you understand? That is for those who actually are what? Who are scalping. But if you're not going to be scalping and you want to actually what? You actually want to make something from the market, you actually have to wait for what? You have to wait for for breakout at this zone. You have to wait out for breakout at what? At this zone. Sorry, I want to mark out these zones for you. Hold on, please. Good. Below this support. They understand. Looking at the fact that price has been ranging, I'm actually want to what? Want to enter my what? My sell below this support. At least waiting for a breakout. Above this verified resistance, I'm actually want to place my buy, probably enter my buy at this verified resistance and probably look at what? Look out for a what? My take profit before this untested resistance. And then for my sell, actually want to look out for a breakout. Breakout below what? This weak support. So I'll be handing off to a senior colleague of mine, a senior analyst in the house, who is actually in the house, who would continue from here. Mine is to actually introduce and give us a general rundown of what happened this week. And then from here, my senior colleague, core analyst in the house, would actually take over from here. Just stay tuned, please.
All right. Good morning, everyone. Can everyone hear me? Thank you, Adini, for that brilliant breakdown. Yeah. So I'm very sure that we all experienced FOMC. I'm sure we all made money, but most importantly, I hope we all understand what the FOMC was all about, right? Because these are news that comes out every month, and they are also very volatile because they are attached to monetary policies, interest rates, and also economic projections. So you want to be able to follow, especially when it comes to the US. The reason why the US is so important in the market is because this market is quoted in dollar. So irrespective of what you trade, you want to be able to know what is happening with the dollar. That is why when you check this particular market, you'd see that we have the United States index. It is there to use the dollar to compare it against most of the currencies. And that is why when we see a very high impact news on the dollar, we see that we have movement from your currencies to your currencies to your commodities to your indices. So you do not want to say, oh, I do not trade anything relating to the dollar, and you still do not know anything, because this market is quoted in dollars. So always try to keep your knowledge about the dollar at par so that you are able to compare them really well. So definitely FOMC came out, and we actually saw that Jerome Powell actually left interest rate unchanged. That was actually, I see it to be a very smart thing to do, because there is only to an extent that increasing interest rate can actually take the economy to, because the more you're going to increase, the more liquidity that they're actually not able to give out, and that would all just lead to recession. And at this point in time, with the increase in prices, the inflation going on, recession is not the best idea for any economy at this particular time. So they were smart enough to raise the white flag and say, you know what, is actually going to be here. And by 2024, we're still going to be looking at, cutting that's trimming down interest rates because there's only as far as it could go. But we could actually see the negative sentiment that this actually sent to the USD. You already know that one thing about the market, investors love good interest rates. They would always pull out money when it needs to, and they'll put in where they need to. They don't really care. They just want to make extra money. So at this point in time, we actually saw the fall, and let's not forget that from the ending of November, beginning of December, we actually saw that the dollar was actually weak. It's not actually to my surprise, because this is something that the dollar does all the time. It's at the end of the year, you see it actually lose a couple of strengths, but at the beginning of the year, or somewhere around February, you see actually pick up a lot of strength. Don't forget that the dollar is actually still world power at this particular time. So there is only to an extent that it's actually going to be on this particular sell. But definitely, this was actually a very beautiful move for almost every other instrument on the market. As as the USD fell, every instrument compared to it actually saw some really good gains. And I know that my colleague has actually spoken about Euro USD, and he has been able to give you guys a breakdown. You could see that as there was a fall on the USD IDX, we saw this massive buy on Euro USD, and it actually has been able to give it some really good gains. But definitely the questions you want to ask yourself now is, okay, so apart from the weakness in the dollar, is there anything else that is actually pushing Euro USD? If there is one pushing the euro that is giving the euro strength, don't forget that when it comes to trading currencies, you're actually comparing two economies, which one is weak, which one is strong. So don't just try to understand, okay, is there anything actually going on within the eurozone that is also contributing to this particular rise in the euro? Definitely the weakness of the dollar alone has actually done its own thing. However, we want to know if there is anything at all that is actually giving the euro strength as well. So definitely, when it comes to the eurozone, they are very, very careful when it comes to battling inflation. As much as they also they actually increased interest rates at on a particular month. I think they even increased it ×2 of what was expected, but still that gave a negative sentiment to investors, feeling that when they were supposed to start increasing interest rate, they didn't do it at that time, as early as the dollar picked up, because every economy understands what interest rate is actually increasing interest rate is going to do to the economy. It might actually help mop out money, yes, but it is going to reduce the level of businesses, investors that they actually have in the particular economy at that point in time. So trust me when I say it is big decisions when it comes about, increasing interest rates. And even yesterday, we saw our ECB president, speak, and that also gave the euro a bit of strength. However, today, I'm sure my colleague has actually given you your entry points for the euro USD. So now let's go to USD JPY. You see, as much as you saw other instruments do a very large buy, you could see that with the USD JPY, it's not so. You could see that it is almost as if it's in a range. However, because one thing about it is that the USD JPY has actually been weak, and when I mean weak, I don't mean bad weak. This is the entire world right now is suffering inflation, and you have one particular country actually suffering deflation. Yes, their currency is dropping, so they don't even feel a need to do anything, because I mean, when people are saying goods things are getting expensive, or particular countries, like, things are actually getting cheaper, that is how good their economy is. And why is the economy like that? That is because they are more of a producing nation. I mean, in fact, almost 80% of what you're going to use today is actually done in China, the JPY region. So they are actually good. And you know that the reason why they have cheap labor. That's just it. They have cheap labor. So it's easy to, they're into the production. And that is why, as the world is here screaming about how expensive things get, maybe based on import, export duties, a country is literally getting cheaper. So you can see that their fight is not even against the dollar at this point. At this point, they are like saying, we're fine, as we're fine, irrespective of what wants to happen. Because even when their president, their bank president came out, he said he didn't actually see a need of increasing interest rates. But however, we have to trade today. So I hope we've been able to check our Forex factory today to make sure that we do not have news coming up, any news that is going to either affect the USD or is going to actually affect JPY. I hope we've been able to check. Just give me a minute. Let me confirm so I can give us good entry points. But I hope we all made money on that FOMC though. And a quick, before I actually forget, if you're a trader of DE30, I don't know if your account officer has reached out to you, but you should know that 10 more companies have been added to the DE30 to the DE30, and by Monday on the platform it is actually going to be DE40. So please, if you're going to be taking a trade on DE30 today, make sure that that trade is closed maybe before the end of today or maybe very early Monday mornings, because if you have an opening trade on DE30 when the upgrade is being done, they would have to close the trade. So please try to make sure that all trades on DE30 are actually closed before the end of today. Let's leave it before the end of today so that, we actually stay. So before the end of the day, please make sure that you close all trades on DE30 before the upgrade is done. So yes, looking at the market this morning, even from the Eurozone, so we have a news by 9:15 a.m., the French flash manufacturing PMI and also the French flash sales PMI. So this is actually going to be good news for, we hope that it actually comes out good. So when you're looking at taking entries on your Euro USD, you have to be very, very precise. For me, we have this particular 21 period moving average that is serving as a resistance right here. Yes, so I can actually take an instant buy. I would want to take an instant buy and follow it to this particular, verified resistance right here. But we can also see that there's also a strong resistance, somewhere here. So, just to be safe, you take a buy once price break above this verified resistance. Reasons being that this particular resistance right here, but I doubt markets would get here maybe till when the news is out by 9:15. So I would advise that if you do not have the risks to take, just make sure that 9:15 is not so far away. Wait for the news to come out and then, take advantage of it. On a sell once it's able to break your weak support. So don't forget, we have a news by 9:15 this morning. We also have a news coming from them also by 9:30 a.m. That's the German flash manufacturing PMI and also German flash service PMI. It seems the euro has the market today. Yes, the euro seems to have the markets today. So we're going to have a very volatile market. If you know you've not funded your account, do that, have your volume and actually pick this trade. They also have a medium impact news. Now, at this point in time, as a trader, you cannot ignore a medium impact news. If you've been able to follow the markets for, for the past 2 months, you'd be able to see that the market has also paid respect to your medium impact. Sometimes I find it funny when I hear a trader say, I was on the market and I don't know what happened. How would you say you don't know what happened? If you don't know what happened, that is why you have an account officer. I want to trade this. What's going on within this instrument? What do I need to look out for? Don't wait for something wrong goes and then we all come back and say my account manager was not there. If you do not reach out to them, they would not know that you need them. So also by 10:30 a.m. this morning, we have the GBP flash manufacturing PMI, by 10:30. So if you're a trader of the GBP USD and anything concerning that, it's also, please pay attention to it. And we also have some low impact news. Then by 2:30 p.m., we're having the Empire State Manufacturing Index. And this is actually coming from the USD. So now, as a Euro USD trader, you know that this market is actually going to do a very good move today. So you want to pay attention. And also by 3:45, we're having the US from the USD, medium impact news. No, high impact news, the flash manufacturing PMI, flash service PMI, and then from the Canadian region from by 6:25 p.m., we're having the Bank of Canada Macklem speaks. So when you see anything concerning the bank governor, you should know that you're going to actually be talking about policies that will change the economy. So definitely, I would actually advise that you wait for the news to come out by 9 this morning, 9:15 a.m., so that you're able to have a clear direction. So coming back to my USD JPY on my 1 hour time frame, let me take a look at it and see let's see what particular trend it has been on. Okay, you can see that's been able to break some support. That tells you that the nothing is really happening within the JPY zone, because even compared to the dollar now, it seems that the dollar is actually, going to be doing well. So coming back to our 1 hour time frame, don't forget that we still have a news by 3 from the USD zone by 2:45 and also by 3. So definitely this is already more like a ranging market. You're going to see it be between this verified resistance and also this particular trend line. Let's go to a lower time frame. Let's see if we can get any opportunity before the news is out. Okay, this is my 15 minutes. All right. It doesn't seem so bad. So definitely we could you could see that price has respected this area a bit. So when price is able to, now when it comes to trading markets like this, one thing you should know is that we are because of the fundamentals, definitely the market might be a little bit, on a funny movement. I call it funny because you can still make money from this particular movement. They are short, they are precise, but what you actually need is, volume and lots, because it is your volume that would actually help you to take your lot size. So in a market like this, you want to have really good volume that even if you're taking a little peep, then you're actually, doing it. So if price is able to break above this red candle, I'm going to follow it down to my 23.6. Like I said, it might not look like great move, doesn't look a lot, but if you have the right account size, the right lot size, you're able to do good with it. And when price break below this candle here, that is, let me give the lowest candle of today, or no, this here, just right below this red candle, I follow it down to this particular trend line, the contour fib that has actually been formed here. If you notice that price has respected the line, you could see it. You can see that it has respected the line. So once price is able to get here, you want to respect it, be out of the market. And once price is able to break it, then you can actually follow it down to your verified support. But definitely, and once price is able to, break above this red candle, you can take a buy, follow it here. Once it gets here, it breaks your 23.6, you take another buy, and then you follow it to the untested resistance. They are going to be quick, because when movements are happening on this particular market like this, you're going to see they are going to be quick. That is, you could be in and out, but then you want to have a very good volume to be able to take advantage of it. But like I said, please do not forget about your fundamentals. Today, there are fundamentals both on the Eurozone, on the USD zone, the Canadian zone. Don't forget about it. So now let's talk about the US 100. Now, this is actually my personal market. This is a very interesting market for me. I like this particular market, not just because of the not just because of it is able to, make you really good money, but the volatility on this market is actually really beautiful. If you want to actually enjoy trading, this particular market, I would advise that you learn about the US 100. Now, what do you know about the US 100? The US 100 is technological stocks. Like when you talk about Microsoft, you talk about, these are the things. And what makes it very volatile is because of this particular industries that are under this particular indices are markets we talk about every day. Every day we go to work, we use Microsoft Word. We're on our phones, our Apple phones. We are there. We're in Alphabet. everything we almost do every day now, because of how technology has actually gone far, it makes the market move. It shows you that, there is things happening within it. And when things happen within an instrument, it is money actually. So this is actually my own personal market. Now, one thing about this instrument is that if you followed it for a while, you know that it is a strong respecter of your resistance and your support. Once you do not have a news to actually break the support, it is always going to be there. And then we saw that when FOMC came out, we saw this particular instrument get to the highest it has ever been. Now, if you've been a faithful attender of our MMR classes since January, you would know that you know that this market has been predicted to still buy. I know that yes, times we see some massive sales on this particular instrument, but looking at how technology is going to actually affect the world, I'm telling you that we would still see a buy on this particular instrument. Because I mean, if you look at it, even when it opened this year, just FOMC alone is scaled through. Now, what is giving strength to all other instruments? You see dollar bad for a while, and then you see other instruments. Investors are getting smarter. Investors are getting smarter, and we all need to get smarter too, in the sense that at this point in time, diversification is happening. No investor right now is playing favors. I'm not going to do you a favor by you're my friend, and I need to put my money where the money is. So one thing investors are enjoying about this particular instruments now are the AIs that are actually coming up. We already know that we already have our ChatGPT. We already have, like, almost every search engine right now has its own AI. From Opera Mini to Google, they all have their own AI. And this is just the beginning. A very good friend of mine would say, tech is yet to start, and we would be seeing a lot of interesting things play out on the market. So definitely we saw that yesterday there was a gap up on this particular market. But if you also notice, you'd see that it has also respected this verified resistance. It has respected the verified resistance. A news came out, it gapped up and respected the verified resistance. That tells you that, as much as possible, this market would like to do cover up of this now, and you actually see it do it and has respected this untested support. Just like I said, when there is no news to move the market, it respects resistance and it respects support. And you can see that even as it's struggling, right here, we're having it here between our moving averages. We see that it has actually been a little candles, but it has also respected a buy. From this point to this point, when you look at it, that's some good number of pips. So if you are taking this market from here right now, and maybe you go here and then it starts to range, you see that you're still in profit. That is why I actually like this instrument. And now we've seen that it has actually broken above our 50-period moving average, which is a good sign for a continuous buy. So we'll literally see this market do a buy, from here down to your verified resistance before the news buy 2 will be out. We had this 50-period moving average. It is actually still yet to start, but looking at the candle, once you get a bullish candle here confirmed, then you can actually follow it to the verified resistance. And once price is able to break below my 14-period moving average, all right, so if it's able to break above this 14-period moving average, then you can follow a sell. But this looks like a good confirmation for a buy. Okay, this is 30 minutes. Let me look at it. Good. So now, even on the 1 hour, you're actually seeing a very good buy. You're seeing even your 14-period moving average and also your 50-period moving average is actually serving as a resistance. So that is a good indication for a buy. And you can see it when you look at it. It has made higher highs. So when it comes to this particular indices, when it comes to this particular index, I can tell you that money is the goal. That is, once you're able to understand what affects it, don't forget that it also has a negative correlation with the dollar. So like I said, whatever, irrespective of what you trade, you want to be able to, understand what the dollar is doing so that you are able to follow the trend. Don't forget, the trend is your friend. Don't go and be against the trend. So understand the trend, understand the instrument so that you can actually take proper trades that would make you money. So like I said, I can take this buy right now. However, okay, let me say if I'm not following down to my weak resistance, I can follow it down to this my particular countdown right here. You can see that they this particular candle tested it and a retracement. So if it's going to do a buy, maybe when it gets here, take your profit. That is, take your profit and then wait to see if it's a retrace. Definitely, if the news is not out by then, we would see a little bit of retracement. So now let's talk about gold. Gold is also one of the most, gold has been a very, very, very interesting instrument. It's one instrument that 1 minute is doing badly and 1 minute you'd see it spike. You'd see it do beautiful buys, and we also saw that on the FOMC. We also saw that somewhere gold was able to get to the highest it has actually been. That is not actually the highest, but we saw a new high on gold at this particular time. And then we also saw a retracement. Let's not forget that gold is actually a safe haven against the dollar. And it's sad that the dollar is not actually backed up by any commodity. Like our US card right now is backed up by oil. But the dollar, I think somewhere late 90s or so, if I'm not mistaken, the dollar was actually backed up by gold. But gold, they actually stopped that. And I think that was George Washington. I really cannot remember, but then I know that and that was how they actually became, this, I don't want to use the word enemies because I feel that they are still very, sometimes they have minds on their own, especially when it comes to gold. So definitely we've been able to see gold do a retracement, and the FOMC actually paved the way for it to actually hit at least a good high as well. However, we've seen that if there's one thing, like I said, that the market would always respect, is also going to be fundamentals. That is why you cannot forget your fundamentals. So we've seen that since yesterday, gold has actually ranged between our 38.2 Fibonacci level and this particular week support, and also my contour line here. So definitely I'll take a buy when price breaks this contour line and follow it down to my untested resistance. And once price is able to get to this particular low here, I'm able to follow it to the week support. So like I said, once it's able to break this particular line here at price 2040.07, I'm going to follow it up to my untested resistance. Don't forget, we have news coming out today. So the market might not do, and don't forget that because of how economy has been over time, the market is getting stronger when it comes to respecting fundamentals. Don't forget that every fundamental will still go back to technicals, but at the end of the day, when you have, especially right now, I don't want to say we are in a confused economy, but we are actually in a place whereby every detail matter. Every detail matter. That is, I want to be able to see it on papers. Investors want to be able to use economic indicators. Like, we have to be sure right now, because the level of inflation that we have is not the one we just want to throw money away. So we want to be sure if the economy is going to be good. So like I said, a lot of diversification is happening right now. So you would see markets maybe struggle to do really long movements when you have these fundamentals coming up. Like I said, you also cannot disregard your your medium impact. I know that most of the time we really do not do medium impact. In fact, medium impact don't actually do anything. But over time now, we've been able to see, don't forget that this is an economy. So you'd see changes that are always, that is why in this market, we'd always say you cannot stop learning. because the market is not static. The market is like a living being because it changes. It has its own characteristics based on the economy that is happening, based on the decisions that we are making. So, like, I would always like to encourage my client that as much as possible that you are a trader on this market, don't see yourself as a trader all the time. Sometimes try to think like an investor. In fact, always think like an investor because you have money on the market. You are actually able to you are the one actually making some investment on particular instruments. Don't just try to think, what would you think if you were the president of the United States? That is how you are when it comes to looking at fundamentals, you're able to look at it, okay, based on what has been able to happen, what based on what is happening. What would you do next? Would you take this on emotions, or would you take this on sentiments? Would you take this on, just pure politics? And you'd see that you'd be able to see the things that is actually playing around. So when it comes to actually trading gold this morning, once gold breaks, you can see that this particular place has actually become a very strong resistance. So once it also breaks this line, it also breaks my Fibonacci retracement, and I will take a goodbye to my untested resistance. And once it breaks my 14 period moving average just below here, like I said, good lot size, good account, and you'd actually and then follow it down to my weak support. So you could see between here and here, they are all respecting resistance and support. So that is it on gold. So let's talk about oil. Oil is actually one of oil is actually in fact I actually like the way I like this particular oil because I don't know why. Mm? But oil is purely demand and supply, and that is what makes it very, 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 very interesting. That is what makes it very, very volatile because it is clearly on demand and supply. So when you want to trade your gold, you actually do want to have a good capital because you would see this instrument sometimes do some particular run on its own. And the one thing that is going to keep you on board is actually going to be your capital. So definitely, we already know that when it comes to oil, we kind of have some particular things going on, ranging from, the war going on, the Israel, Hamas, Ukraine, Russia. We also know that they still have ban on the Russia oil. OPEC is trying to meet demand. There is a whole lot of things. And if you've also noticed, somewhere along the line, our crude oil inventories used to be a low impact news. But recently, it has turned out to be high impact news, a medium impact news. Like I said, economy is changing, things are happening. You want to be able to cross your I's and dot your T's. So one thing you'd be able to see now that there are some news that were not so important, but now they actually seem to be important because the last time I checked, my crude oil inventory was now a medium impact news. So when it comes to oil, one thing is also the US affect the oil as well. So don't just sorry, don't just say that, oh, is oil, what does the US also affect your oil? So you also want to be able, so you could see that fall in the particular US has actually given this rise in oil, and it might have been slow and steady, but it was also some interesting peeps that he actually took. And it got to this particular place, did the retracement. And the thing is, the set of people who would always let put price where it is, it's always going to be OPEC is going to decide how they want the prices of oil to actually be. So one thing about oil is that we all know that it is something that everybody uses. It's something that is used for world production. It's something that it's almost saying that a lot of things would be inexistent if we didn't have oil. And then also looking at what looking at what has been going on, the China, the Taiwan tension, these and all of that. So definitely it's a very clear direction for oil this morning. It looks like a very complicated market here. So you want to actually play safe and take a buy above my 38.2 and follow it to the weak resistance. And don't forget, we also have a news, like you see the way I keep repeating it. And once price breaks this 21 period moving average, you can take a further sell down to the 23.6. Like I said, it might be a slow market today, so you do not want to, if you do not have the capital, please do not take so much risk if you do not have the capital. So now, how many instrument have we gotten to see? We've done Euro USD, we've done gold, we've done USD JPY, US 100. So which one do we do next? Okay, let's look at our US 30. You can see that almost the same movement with we already know that the indices, they always move in the same direction. So definitely you see that at this point in time, this instrument has gotten to a high as well, and it is actually on my 0.0. Now, for me, when it comes to my index, right, I enjoy using my FIB. My FIB has been a very trustworthy indicator when it comes to using when it comes to actually trading my indices. Now, I'm not saying it's the best indicator. I'm not saying it's the only indicator. Now, the thing is, when it comes to trading, we all as traders are actually going to find the thing that works for us. So it might not be, you might actually be able to use your moving average to be able to understand more of your indices, depending on how you look at the market. So I will definitely take my buy for this instrument. Once it breaks my 0.0 FIB, I'll take my buy. And when price is able to break below the lowest candle of today, I would actually take my sell. So I'll take my sell here and I'll take my buy right here. I'll take my buy right here. It might not be almost immediately because I do not want to get stuck in a fake out. I'm sure we all understand what fake out means. So I would not want to get stuck in a fake out. So once my price gets here, I'll take my buy. And once it gets here, I'll follow my sell to the weak support. But don't forget that this is acting as a resistance. So we might actually see that respect that comes between the resistance and the support on the US 30. Also looking at the US 2000. Let's just look at, you'd see that this market also has almost done this exact same thing. So first of all, we want to know that this instrument, it can make you money. So that is why you want to also have really, really good capital to trade your US 2000. And trust me, this particular candles that you see, if you are taking it at some point during the FOMC or at some point alone on a good lot size, trust me, your Christmas is actually set. So for me this morning, just like that, you could see that we want to avoid these fake outs. This is what they call a fake out. You think that it has actually broken the verified resistance only for you to see it retrace. So to avoid fake outs, you do not want to enter almost immediately. Don't forget that your resistance and support is not a line. It is a region. It is not a line, it is a region. So definitely my verified resistance, I'll take a buy above here, and then I'll take a sell at the lowest candle of today. Let's say, okay, maybe below here. And I'll take a sell. Definitely I don't see the sell getting to this particular tone code support based on the time the news is out, but I'll take my profit just right here. Yes, like I said, good lot size, good account, and then go in. And then definitely follow this to the next untested. Once it's able to break this verified support, definitely it's going to be testing the next untested resistance. Like I said, this is the US 2000. There is enough money, but you want to have a good account size. You don't want to be caught. You don't want to be cash trap on this particular instrument. Then the USD card, let's look at the USD card. We already know one thing. See, like I said, fundamentals are doing a lot at this point in time. So please don't ignore it. Please don't ignore it. I'm begging right now, because right now the market needs proof. Investors need proof. So definitely, you've been able to see that every instrument, every currency has been able to gain a lot of strength when it comes to comparing the dollar. And that's because the dollar have said we are not increasing interest rates. We don't want to run our economy to the ground. Don't forget that 2 times this year, that was somewhere in 1st of October and November 17th, the United States has come out to say that if they didn't have money by in 24 hours or something like that, they were actually going to shut down. And this shutdown was going to be causing them to lose at least 15 billion in a day. So you can imagine how, a country that says we don't have money one time, this is the same country that actually promises to help Ukraine with $22 million. It's crazy. So economies right now want to see proof. Like, don't be telling me one thing and I'm seeing another thing. So what fundamentals are going to bring to the market the next few years or the next few months, you want to be able to take advantage of it, and you already know how direct it is going to be. So we can see that at this point in time, you see the dollar just went don't forget, this is the USD against the CAD. And one thing that is also good for the CAD is that the CAD is supported by oil, and you've been able to see also oil gain strength. So it also, when oil gains strength, the CAD gains strength. When the dollar actually lost some gains, CAD is up. So we saw most of the instruments actually gain balance on the market this particular FOMC, and we might actually be seeing that maybe clearly till the end of the year. But definitely, you also want to look out for your dollar doing well, because trust me, your dollar is not going to be down. This is the dollar we're talking about. So we see that price has been able to take a very drastic, fall. It has even tried doing recoveries, but however, we still see further sales. So definitely, I can follow this particular. I do not want. Let me look at it on a smaller time frame. Yep, it is actually all in the same place. All in the same place. So I would actually just play very safe and take my sell when it breaks my verified support and follow it to the next verified support. And I'll take my buys. You can see that the buys are not, it seems like more instruments are not looking to do some major buys until the news is out today. So my buy would, after this particular, just the top of this particular candle, and follow it to my down code support. Like I said, good volume is actually very necessary for this particular instrument. For this particular trading, because you see yourself, it's more like scalping, but just on a smaller time frame. So you do not want to know half the capital. Now we're looking at the DE30. If you were not here earlier, I said the DE30 has been 10 other companies have been added to the DE30. So by Monday, we're going to be seeing DE40. Now, what does this mean? Don't just think about it as a change of name. If you're a trader of the DE30, you know that this market is actually going to be more volatile. You know that this market is actually going to be more profitable. So you want to know that the capital I'll need to trade my DE30 has now gone up. Now, you should understand, the more volatile an instrument is, the more profitable it is. So you don't want to say, oh no, I don't want to trade a volatile market. No, volatility is not to scare you. Volatility is to prepare you to make profit. So try to take advantage of volatile market. So as a DE40 trader, please realize that 10 more instruments, 10 more companies has been added under your DE30. So volatility is going to be very much available. Definitely. So you do not want to, lose guard and think that you're going to be working with this thing. The volatility is going to be good. It's just like your US 30, US 100, US 500. The higher the number, the higher the volatility, US 2000. So you want to also know now that D30, the number has gone up. So there is a lot of money to be made. So try to always be safe, have the right capital size, use the right lot size, and, have a great time on the market. So definitely looking at my UD30, you already know one thing, that the UD30, I don't want to say it copies the US 100 or I don't say it copies the US indices, but they actually do have like minds. So we could also see that there was that same this thing that happened. So definitely, but interestingly, as it happened, okay, it happened today. So as it happened, we've been able to see that it also went to break an untested resistance. So this would naturally tell you that we would likely see the buy continue. We would likely see this buy continue. I want to see how close we are to the next resistance so we could know where to take have our take profit. Wow. Okay, you can see that this is pretty high. This is pretty high as no resistance is actually seen anywhere close. Let's look at it from 30 minutes. Interesting. Interesting. Who would have thought that just that weakness into dollar would have done a lot of good for a lot of instruments? This can actually, push even their this thing for bricks to actually, because if the dollar is weak, it seems like every other thing is doing really well. So definitely I would not want to test my luck on this buy, honestly, because of how far it is, and I like to think that this cover up would have to also be covered. So I would advise a sell for me once price is able to break this particular week. Sorry, when price, okay, I wanted to increase that. When price break this particular candle wick right here, and I would take my sell and take it anywhere between where this gap is, because as much as you're expecting a gap, you also would not want to expect that the market is going to do a 100% cover up. It may not, but just to be safe, use a good lot size, put your, good take profit, take advantage of the sell. However, let's not forget this can also be a fake out. The fact that this candle has not closed now, means that it can still retrace. So what I would advise is if this candle is able to close bullish, that is, if it close green, and you're seeing the next candle go green, you can actually take a buy, but be safe to take your profit not far away using a good lot size, because you do not want to be caught. Like you see, we do not have any resistance anywhere close. We do not have any resistance anywhere close. So you will not want to think that, oh, because it has broken a resistance, it's just going to continue buying. And because there is actually no resistance, it may happen. But depending on, don't forget, we also have a news today from the USD zone. So depending on how the news comes out, you might see a further buy happening on your D30. As you can see, this is just 1 hour time frame, but this is some really, really good movement. So but just to be safe, or if you can take the risk, you can actually enter an instant buy. But for me, I think I see more of a sell, and depending on how the news is going to be out. So how many have we done right now? We have done the D30, the US 2000, 1, 2, 3, 4, 5, 6, 7, 8, 9. So I will do one more. My battery is already low. Sorry about that. I'll do one more so that we can round up the classes, the class this morning. So definitely looking at GBP USD. Don't forget that there's a news from the GBP today. It is also it is a medium impact news, but like I said, medium impact news at this point are also very, very important. So looking at what the market has for us right now, we can see that the GBP went up few as the FOMC came out, and it has also, I mean, the weakness in the dollar has made every other thing very interesting. So looking at this particular market, you see that it is actually waiting for something, for a clear breakout. So it is very, very important that you take your buy at the highest candle here, and you take your sell. All right, I've been given a warning about my laptop. So you take a sell at the lowest candle. Like I said, the market is waiting for something. The market is expectant of this particular news, and they would want to. Investors want proof that your economy is good or your economy is bad, because they're not just going to be putting their money. Diversification is happening, and you should also be doing that. So I hope we all understand, the FOMC. I hope we're able to take advantage of it. And if you do not know how to trade your fundamentals, please contact your account officers so that they can actually explain to you better. And you can always try watching it on your demo account so that you have a better understanding, because these fundamentals don't stay as long. I notice that some clients would think that, oh, because the buy have started, you to buy for an hour. No, you need to understand the fundamentals behind the fundamentals so that you are able to take advantage of them. Don't forget, follow this one to the verified support when he breaks this particular level. Follow it here for a sell. Like I said, good peeps, short, good lot size, small peeps, but some really good amounts of money. So thank you very much today for attending the class. If there's anything I've said you don't understand, your account officer is here to answer. My battery is actually low and it will be going off anytime soon, but I'm glad that we are able to take a look at this instrument. Please do have an amazing day. Anything, any question, please reach out to me, reach out to your account officer. If you need to speak to me, tell your account officer to give you my number. My name is Anita, and definitely. So please do have an amazing day. Trade safe, compare your risk to reward so that you know the kind of trades that you're taking. Always consider your account size. Always consider your account size. I'll be looking forward to having this class again. Please do have an amazing day.